Artificial intelligence is viewed as a revolutionary force that is changing industries and daily lives, not just a futuristic notion. AI is swiftly being incorporated into a wide range of goods and applications, from virtual assistants in our homes to self-driving cars on our highways. As a result, it is gaining ground in conversations about investments and the future. Investors are looking for opportunities to profit from an industry that is expanding quickly. Nonetheless, there are difficulties involved with investing in AI. The AI industry is complicated, and news of new capabilities at one company can cause a reorganization in the rate of change at all of them. Similar to how investors had to sort through smartphone and app-based startups 50 years ago, they now have to do the same with specialized companies and well-known tech giants fighting for research funding and market dominance in artificial intelligence. In this video, we look at the top AI funds and companies and discuss how to become a more knowledgeable investor in this market. Hit that subscribe button before we continue. The automation of repetitive and routine work was made possible by computers, but AI now aims to enhance this idea by automating tasks that once required human intelligence, making the computer revolution a fitting metaphor for investing in AI. AI is quickly emerging as a significant disruptive technology. Finding these patterns and making investments in startup businesses can result in large financial gains. Still, identifying the businesses that will succeed will be difficult given the intense competition. Occasionally, one company captures and maintains a dominant market share, while other times, an imitator gains a competitive advantage by improving the usage of the original company's technology over time. Some investors may prefer to put their money directly into AI development companies, while others may put their money into businesses that will stand to gain the most from AI's broader use. By using the emergence and expansion of the personal computer sector as an example, investors could have made profitable investments in router and switch manufacturers or computer manufacturers. Some made investments in software firms that created computer programs, while still others looked for businesses that would most profit from the automation that computers provided. While some of these investments were more cautious and involved purchasing shares in well-established businesses that would profit from the rise in computer usage, others were direct wagers on computers and technology itself. The idea is that when new technologies are developed, there are winners and losers. Finally, there might be chances to find businesses, including those that concentrate on worker retraining, that might profit from these significant changes in the workforce. Since many people think AI could have a positive economic impact and displace a lot of workers in numerous areas, purchase AI ETFs and stocks. Top AI companies. Tesla. Tesla employs artificial intelligence to automate driving, requiring continuous data processing to recognize other vehicles, traffic lights, road conditions, and pedestrians. Driving involves constant scanning and processing to account for conditions that change instantly, as anybody who has driven knows. As of May 2024, its market capitalization is 12 times larger than that of Ford Motor Company and nearly twice that of Toyota, the second largest automaker. NVIDIA. Because of its efforts in creating graphics processing units and associated software and hardware, NVIDIA Corp is leading the AI revolution. Investors have taken notice. As of May 2024, the share price had increased by more than 2,000% over the previous 5 years and had tripled over the previous year. Originally developed for the PC graphics and video game industries, GPUs are now the main component of augmented reality, virtual reality, robotics, AI, machine learning, and even Bitcoin mining systems. Microsoft and OpenAI, the business that created ChatGPT, are partners. It has taken advantage of this collaboration to include AI into its Azure cloud services, and Microsoft 365 now offers a generative AI add-on subscription called Copilot. During its April 2024 earnings call, Microsoft reported that around the same percentage of Fortune 500 companies were using Copilot as it was Azure OpenAI. The largest chip manufacturer in the world and a significant contributor in the production of chips for artificial intelligence is Taiwan Semiconductor Manufacturing. The need for powerful processing chips will increase in tandem with the growth of AI application. TSM might be less risky than other companies that are just making pure wagers on AI, because it is an established business that still produces chips for non-AI computer applications. Its stock price has increased by almost 230% in the last 5 years, and its yearly growth rate from 2019 to 2024 is 17.7%. Meta Platforms. to drive search results and anticipate the information its users want to see. Meta has built out a sizable language module and made major investments in AI. Additionally, it has integrated generative AI within the Facebook and Instagram app families, and it is still working on developing additional generative AI features for its advertising services. Amazon.com. Amazon offers machine learning and artificial intelligence services to businesses in addition to utilizing AI in its Alexa system. Amazon Web Services, the company's cloud computing division, offers an AI infrastructure that enables users to evaluate data and integrate AI into already existing systems. Additionally, Amazon has opened up wide access to its Amazon Q AI Assistant for data research and software development. Developers can obtain AI foundation models from firms like AI21, Anthropic, Cohere, Meta, and Amazon itself through Amazon Bedrock. These models are used as a framework for creating more specific AI systems. Apple. For a while now, Apple has been incorporating artificial intelligence into its photo, camera, health and fitness, map, and other products. This is in addition to Siri, which uses AI to communicate with users. However, investors have been waiting for Apple to integrate generative AI into Siri and its other products. As of right now, Apple customers can utilize ChatGPT through OpenAI's iPhone app, for which Apple receives 30% of the sales. Apart from AI firms offering their services via Apple's platform, the corporation can also leverage its enormous financial reserves to make significant investments in AI that it develops in-house or buys with its enormous financial reserves. Exponential Technologies ETF for iShares. A large-cap fund called XT chooses international stocks that aim to upend their respective industries. This includes the nearly half of the fund's stocks that are in AI technology. The other half is invested in industrial and healthcare equities, which are also aggressively examining how artificial intelligence might significantly impact their more established sectors. This fund yields 0.44% annually and has an expense ratio of 0.46%. Defiance Quantum Computing and Machine Learning ETF. This fund, which has net assets of roughly $246 million, makes investments in businesses that are attempting to bring their research and development on quantum computing systems to the market. The Blue Star Quantum Computing and Machine Learning Index serves as its standard. It offers an annual yield of 0.8% and an expense ratio of 0.4%. Robotics and Automation Index Global ETF. Robo makes investments in robotics, automation, and artificial intelligence firms, as well as growth and value equities. The fund has an annual yield of 0.05% and an expense ratio of 0.95%. How to look for investments in AI. An investor must put in more work when purchasing specific AI stocks. The first step is to read up on the industry to grasp the several facets of artificial intelligence, as there are numerous ways to invest in this field. You will need to determine the kind of exposure you desire in this market sector, as there are pure plays and more conservative plays inside the AI cosmos. Once you've determined which segments of the AI market to target with your investments, you may conduct both technical and classic investing assessments. Earnings forecasts. A company's earnings are a wonderful indicator of its performance, and AI businesses that consistently and steadily increase their earnings should be seen favorably. Earnings growth will be a key factor for many investors, as many AI companies will be perceived as growth stocks. The movement of AI stocks is usually abrupt when earnings are released. Important narrative information about the firm's operations is provided by annual reports, and the financial statements let you examine the debt-to-equity ratio and other accounting ratios that the company uses to help you decide which stocks to buy. Comparing a stock's performance to that of an index or another stock is known as relative performance versus the market. It is best to compare the relative success of younger AI businesses with those of similar companies. Growth analysis examines how a business has expanded over time. To ascertain the company's strength and future prospects, you'll look at earnings, market share, and other data. In 2024, investing in AI presents attractive opportunities for portfolio inclusion. The media, healthcare, automotive, finance, and other industries are just a few of the industries where technology is still gaining ground. But you'll also have to deal with obstacles like possible changes to laws and regulations, shortages of supplies, and larger ethical and political issues around the widespread use of AI systems and the environmental implications of their power. If you want to profit from the AI explosion while minimizing dangers, You'll need to keep informed and invest wisely in businesses that prioritize strong business models. If you learned anything from this video, then don't forget to like this video and subscribe to our channel. See you in the next video. Thanks for watching.